Are you ready to dive into trading? Today, we compare Trading 121 and Vanguard, both of which offer unique benefits and features. First, Trading 121 is designed for active traders, featuring a user-friendly interface and advanced tools ideal for hands-on trading strategies. In contrast, Vanguard focuses on long-term investing, known for its low-cost index funds and a strong market reputation, making it perfect for those seeking steady growth over time. Regarding account types, Trading 121 provides individual, joint, and retirement accounts, while Vanguard offers individual retirement accounts and brokerage options. Choose the one that fits your investment goals. In terms of trading fees, Trading 121 has competitive rates for trades, whereas Vanguard's fees are typically lower, particularly beneficial for long-term investors, which can greatly impact your returns. Now, let's look at technology and tools. Trading 121 offers real-time market data, charts, and analysis tools, while Vanguard emphasizes educational resources and planning tools for beginners. Consider which tools align with your investing style. When it comes to customer service, Trading 121 offers live chat and phone support, while Vanguard has a solid reputation for customer service, mainly through email. Evaluate your preference for receiving assistance. For educational resources, Trading 121 features webinars and tutorials, whereas Vanguard provides guides and articles to explain investing concepts. Opt for the platform that best supports your learning style. In summary, Trading 121 is ideal for active traders wanting advanced tools, while Vanguard suits long-term investors looking for low-cost options. Understand your trading style to make the best choice. If you're ready to get started, choose the platform that aligns with your goals and sign up for Trading 121 or Vanguard today. Happy investing! Are you prepared to explore trading opportunities? In this analysis, we will compare Trading 121 and Vanguard, both of which present distinct advantages and functionalities. Trading 121 caters to active traders, providing a user-centric interface and sophisticated tools tailored for tactical trading strategies. Conversely, Vanguard is oriented towards long-term investing, renowned for its low-cost index funds and robust market reputation, which makes it an excellent choice for individuals seeking consistent growth over time. In terms of account offerings, Trading 121 supplies individual, joint, and retirement accounts, while Vanguard specializes in individual retirement accounts and brokerage services. It is essential to select the option that aligns with your investment objectives. When examining trading fees, Trading 121 features competitive trading rates, whereas Vanguard generally offers lower fees, especially advantageous for long-term investors, as these fees can significantly influence overall returns. Regarding technology and tools, Trading 121 provides real-time market data, comprehensive charting capabilities, and analysis tools, while Vanguard focuses on educational resources and planning instruments designed for novice investors. Assess which tools resonate with your investing approach. In the realm of customer support, Trading 121 offers live chat and telephone assistance, while Vanguard is well regarded for its customer service, primarily through email channels. Consider your preferred method of support. For educational resources, Trading 121 includes webinars and tutorials, while Vanguard offers guides and articles to clarify investment concepts. Choose the platform that best complements your learning preferences. In conclusion, Trading 121 is suited for active traders seeking advanced tools, while Vanguard is ideal for long-term investors prioritizing low-cost alternatives. Understand your trading style to make an informed decision. If you are ready to proceed, select the platform that aligns with your goals and register for Trading 121 or Vanguard today. Wishing you successful investing. To support your points comparing Trading 121 and Vanguard, consider the following additional examples. Active trading versus long-term investing. A trader who frequently buys and sells stocks may benefit from Trading 121's advanced charting tools and real-time market analysis to make quick decisions. In contrast, an investor saving for retirement might prefer Vanguard's low-cost index funds that allow for steady growth without the need for constant monitoring. Account flexibility. If someone wishes to invest jointly with a partner, Trading 121's joint account options would be advantageous, whereas Vanguard's individual retirement account options would appeal more to someone focused exclusively on retirement savings. Trading fees impact. A day trader using Trading 121 who executes multiple trades a day might appreciate the competitive trading rates. Meanwhile, a long-term investor using Vanguard could save considerably on lower fees over time, which could compound significantly. Technology and tools. An active trader may utilize Trading 121's real-time data to spot market trends quickly, while a beginner might find Vanguard's educational guides helpful in building foundational knowledge about stocks and bonds. Customer service preference. An investor who values immediate assistance might prefer Trading 121 for its live chat feature, while one who is more patient may choose Vanguard for its detailed email support, knowing they will receive thoughtful responses. Educational resources utilization. If a new investor is looking for structured learning, they might benefit from Trading 121's webinars, whereas someone more familiar with investing might prefer Vanguard's detailed articles that address specific investing topics more in depth. By incorporating these examples, you can clearly delineate the strengths of each platform based on user needs and preferences. Trading 121 is ideal for active traders due to its advanced tools and user-friendly interface, while Vanguard is better for long-term investors, offering low-cost index funds and a strong market reputation. The choice between them depends on your trading style, investment goals, preferred account types, fee structures, available tools, customer service, and educational resources. Thank you very much for watching. Please like, subscribe and click the bell. Thank you.